So we've been talking about brokers selling the wrong stuff to the wrong people, and also about brokers going belly up. And that's not something that only us have thought about. There's people who get paid for thinking about that they call the regulators. And in the European case, the pan-European regulator is called ESMA, is the European Securities and Markets Authority. And this is a pan-European institution based out of, I think, in Paris. And they are the ones that issue the MiFID regulation. So they are the European institution of the European Union that issues legislation to rule how the single European market for capitals work. And then MiFID becomes binding orientative legislation for the national regulators to implement. So in this case, the FCA cannot issue something which is different from MiFID. The BaFin in Germany, likewise, and on we go until we have the 27 or 20, is it 28? Well, depending on Brexit. Brexit. So that's all the European regulators, and so that's how that works. Okay. Now, when it comes to retail over-the-counter trading, ESMA has made the headlines recently because I think it was April 2018, they came out with a new regulation, or like a new set of a temporary product intervention to correct what they thought were issues that were going on in the European retail CFD trading sector. I'm not going to discuss all of them in detail, but basically one of was, is don't sell this stuff. This is too dangerous. So it's marketing. So basically banning the distribution of binary options and restricting the distribution of CFDs. And then there were a whole other bunch of, the other one was disclaimers, along the lines of, if smoking doesn't kill you, trading will. And the other one was risk limitations. And this one had two ramifications to it. The first one was you should not offer leverage to customers. Mm-hmm. And the other one, or you shouldn't offer as much leverage to customers. And the other one is if you have extended any leverage to customers and the customer has a negative debt with you, they basically blow their accounts, then it's your fault, not the customers. And that's where the kind of negative balance protection comes. So that's the restriction that ESMA imposed on European brokers. Now, in the short term, this has made a couple of things. One bad example, one bad outcome was the fact that ESMA was not kind enough to discuss this with the ASIC, Australian regulator. So everybody who was in Europe and needed leverage and said, whoa, we don't like this, then all the way they went to Australia. And that left European brokers like us feeling a bit disadvantaged because, that's not nice. ESMA, if you're going to do this, which is fair enough, do it, but do it for everybody at once. Well, so that was the first one. Then eventually, ASIC realized, whoa, where's all these European guys coming from? And they're all getting tons of leverage. This is too risky. And then ASIC said, oh, we're going to impose the same. It took us a year and a lot of mumbo jumbo and so on. But, thank you, regulators, for taking coordinated actions. Yeah, that's on me. That cost about 6 months of my life. Thanks very much.
Worth it, though.
Yeah. So, well, anyways, at least that was the bad part. The good part was that, never mind that if you don't allow people to take leverage, then of course there's no need to impose negative balance protection, because if there's no leverage, there's no negative balance. Well, that's another 6 years of our life, because Darwinex has to upgrade. We had to upgrade our permissions for reasons that I explained in another video, but that's basically another 6 years of our lives and tons of technology. And thank you very much. That's a real pleasure. And now we go on to the leverage rules, and the leverage rules are actually a very good thing, because we've seen, and we'll actually expand on this in a dedicated video, that the traders are doing better than ever. So the 6 to 12 months post ESMA have been the 6 to 12 best months for European, for P&L for our customers. So in that sense, there's been a one-off hit in the sense that we generate less commission for every unit of customer equity. But the great thing is that we are no longer dealing with fruit fly customers who come in, blow up, and then go, leaving us with a sour taste and then without money. So
the funny thing is, we were releasing study after study before ESMA, before we even knew ESMA was going to happen.
Yeah.
About target leverage levels and their impact on the probability of ruin.
Yeah.
And we sort of arrived at the...
No, they've done the right thing. They just did it 3 years too late, and they didn't speak to the Australian collaborators. But hey, but they did it. So thanks very much.
The results are evident, right? So ESMA happens, and people start doing better.
Yeah.
Precisely what we were saying. Don't risk so much.
And we can discuss that, in another video.